Good. Let's just refresh this one, and we are ready to go. Perfect. So, hello everyone. We have the pleasure today to have Nicky Shiels, head of metal strategy at MKS PAMP, here with us. So, thank you very much for accepting the invitation.
Oh, absolutely.
It's really cool to have you here finally.
Finally.
Yeah, we tried to organize this meeting for 6 months now.
Yeah.
And probably for the person that read our newsletter, they already see you know, some of your input directly on the newsletter. But I know that our customer have a lot of questions regarding precious metal, the price of gold, of silver. We are not the expert, but we have today with us one of the biggest experts worldwide, I can say. And regarding the price, every year the LBMA do this challenge where the expert have to do the forecast of the price.
Right.
And as MKS PAMP, we are the sponsor of this competition. And voila, what a coincidence, you came up the winner last year.
Yeah.
And what is pretty impressive is that the average price during the year was 1,809 cents. And you predicted the average price 1,800.
Yeah.
So you were 9 cents
Wrong.
wrong. Yeah.
But yes,
it's
no,
really
close,
impressive.
yes.
Really impressive.
Yeah.
So, and the price was the 1 ounce Lady Fortuna, and I have the pleasure to give you the carbon neutral Lady Fortuna. So this is for you.
Great. I mean, this is the reason why we're doing this. I'm joking. But yeah, very, very psyched to get my first gold bar. So yes, this is great.
Cool. And just to introduce the discussion, and the idea of this format is that we will go through 4 to 5 questions. Then we will answer some of your questions. So don't hesitate to write your question in the comments on YouTube, on Facebook, and so on. And then after we answer the first question, if there is no more question, we can go on other question that I saved on my document here.
Perfect.
And just to start, regarding the price prediction, because you won last year.
Yeah.
We are really looking forward what you're thinking this year. I know that you said you estimated a price of 1,880 at the beginning of the year. It is the price with the one you are participating to the forecast,
right.
exactly, to the challenge. And I forgot that you also got the 3rd place for silver last year.
Oh yes.
So pretty impressive as prediction. And you just revised the price at $1,930
Yes.
per ounce, obviously. And can you say a little bit more regarding your prediction for this year?
Yeah. So we came into this year and we were pretty constructive gold and silver and precious metals as a whole. And things just really started to escalate in March, and I call it March madness with the banking crisis, because it shook a lot of confidence in the system, and you had a lot of people who are current precious metals owners or new precious metals owners just reallocating wealth and looking for new ways to reallocate their wealth. And so yes, I have revised up my price forecast, and we're looking at perhaps revising again. I think a lot depends on the Fed.
Wow.
Gold has traded above my forecast the past few months. So you can naturally take from that it will likely be higher. But we want to see what the Fed's thinking is, because again, that's probably one of the number one drivers of short-term gold pricing in the past, and what will go on in the future. And I think we'll see what they come up next week when we've got CPI and the Fed meeting.
Okay, so regarding the results of next week, you predict to revise your gold price.
Correct.
Lower, higher?
The likelihood, just given where price action is, and gold is traded above 1930 the past year, it will likely be higher. I can't say how much right now. And for silver, I'd revised up to 24.
Okay.
Silver price is currently below my price forecast, but again, I think silver's undervalued and does have some potential in certainly this year to play catch up at some point.
Okay, really interesting. And again, how do you predict? We add your comments every week, and have you then, with the information that you have on the market, you can re-elaborate your prediction and know more or less the direction where the price is going?
So for gold specifically and silver, the thinking behind price forecasting is, and I've traded and sort of looked at other metals as well, like including copper and base metals, and the process is a little different because gold is very good at predicting what isn't black and white and what isn't quantified. And most other commodities, you say supply minus demand, and you kind of fudge for the macro. But gold is a lot of it is trying to understand the uncertainties and what exactly is driving price action. So it's a little tougher in gold. I think being at MKS, where we're plugging in with a ton of clients around the world on the physical side, helps us to see some of those flows. And so it's a mix of looking at the macro drivers and then some of the micro fundamental flows that we see.
Yeah, it is very interesting because I don't know if people realize how valuable your input in our newsletter is, and we really want to value your content, even push it more because they don't know you now. Gradually, they will be able to put a face on your name. But again, you also take the insight that you have at MKS with all the customers, with the refinery. So you have a lot of insight when you do your analysis on the market. So really, really interesting. And regarding the banking crisis, is still ongoing. Do we will see more banks to be in trouble in the next few months, in your opinion?
Yeah. So the bank, it really was a game changer for gold and silver, and that's silver went up to 26, and gold sort of touched that triple level around 2070 again, and failed. Sort of following and the banking crisis, and I said it did drive a reallocation and a rethinking of where exactly people want to park their wealth. And is it still ongoing? The last month has been pretty quiet, right? And it's been reflected in the gold price, where we've come down $100 from that. And the Fed is still, and perhaps may still hike, and I do think there's some fear around it. I do think we're on headline watch. I do see if we see another shaky headline around a regional bank, gold will certainly rally and respond to that. It's tough to say who and what, but certainly with higher interest rates, the system, the global monetary banking system gets a lot more shaky, and we still probably 1 or 2 more hikes and we're not talking cuts anymore, because U.S. data, to be honest, is still pretty strong, right?
But and the inflation, because we always said the gold secure from the inflation, for the increase of the price and so on. But in the last few months, we didn't saw this increase in price of gold compared to the inflation. From one side, also due to the fact that the Fed increased the interest rate.
Yes.
But is gold an edge against inflation as of today?
In the simplest terms, yes. Gold is a hedge against structurally higher inflation, which we do think. We've been in a lower inflation regime the past 2-3 decades. It's all supply driven, right? The Fed is not going to change OPEC policy. The Fed cannot change a war in Ukraine. A Fed cannot change ESG type policies, which are all a cost push. So we do think we're entering this higher inflation regime, which is going to make precious metals more attractive to hold, whether that's physical through bars of coins, whether it's through ETFs, through various means. On the short term, it is a double-edged sword, inflation, because if you have a very aggressive Fed hiking to combat inflation, gold will certainly trade lower. But the fact that the Fed is certainly near the end of their hiking cycle, and inflation's not down to target, it's not down to 2%. You're still sitting with the UK at 8-9%. Europe is about 6-7%. These are emerging market style inflation numbers, and so yes, I do think it will be a very strong underpinning for physical demand going forward.
It's really impressive. I just have a call with my uncle that lives in Argentina, in Buenos Aires. He told me, the inflation here is just crazy. We cannot, keep track of the price. Every day the price of everything has changed, and they don't know how to get out of this situation.
No, it's not, Argentina, that's a great example, but like even closer to home is Turkey, and you see the headline that Turkey inflation falls to a 1-year low, but it's still sitting around 40%.
Wow.
So
Can you imagine?
And that has certainly driven in that region, which is very gold centric region, has certainly driven a very a strong response from consumers to buy physical gold specifically.
And so we can say that gold at the end stay a safe asset with the actual economical situation worldwide.
I think yes. Gold is still a safe haven asset, and I think the best example is looking at gold's function last year. Gold ended the year flat. It wasn't up or down really much. It was pretty steady. Gold in US dollar terms, right?
Yeah.
And I think a lot of people who are generally gold bulls were very frustrated because they said there's a war and there's inflation. Why isn't gold higher? But the world fell apart last year. The 60-40 portfolio, you shouldn't have stocks and bonds both fall down at the same time. So I think gold proved itself as a safe haven. It was relatively safe versus every other, versus crypto, versus equities, versus bonds, versus currency. So it did what it should have done last year, which again indicates it is a true and trusted safe haven with a 5,000 year CV.
You said the tricky word crypto because I think last year we had a lot of questions regarding is better to own gold, better to own crypto. We always said there is not a better to own. It's always a diversified portfolio, and correct. We saw exactly last year why it's important to have a diversified portfolio, because when you have one asset that is down 60%, 80%, even more, it's reassuring to have part of your asset in something very tangible like your Lady Fortuna on the table.
Yes. No, absolutely. And I think, they got the gold versus crypto argument is, and we get also a ton of questions. It's interesting because they do stand for the same anti-fiat argument, right? Anti-big governments, and they stand for the same big structural themes. But at the end of the day, they're two very different asset classes.
Yeah.
One is extremely volatile and liquid and very immature, and gold is a mature, liquid, safe. So again, it comes down to investor preferences and having a diversified portfolio for sure.
I think the word mature is exactly the right word. I am a big crypto believer, blockchain believer, but as of today is not a ready technology, obviously with a lot of potential, but gold is mature. It's 5,000 years.
Right.
That is...
and, speak of today, we just had, another sort of regulatory headline come across the crypto space, and it's tricky. Gold it comes with new immature markets, and it's something to watch where it does need a little more regulation in the space.
Yeah. Very interesting. And just maybe a last question before to jump on the question of our viewers. I don't know if there are a lot of questions. Yes, Sama. Okay, perfect. Silver is something very challenging. A lot of our customers ask us, where the price of silver is going. There will be a crunch on the supply. What is your opinion? Last year, as I said before, you had the third place as a silver prediction. So where you're predicting silver to go in the following months? And
right. I think silver, there's a ton to talk about and unpack, and it is undervalued. You look at a 10-year chart in gold, and if you're sitting with gold around $2,000, silver should arguably be around $30. But you're seeing it is, if we expect a recession to come, you are seeing most industrial commodities, whether it's oil, PGMs, or silver, are naturally, there's a hesitancy to own them because, there's an expectation that we will be seeing a recession pretty soon. The other one is, supply across these battery materials, whether it's copper or base metals, has really ramped up, and silver's a byproduct to that. So that supply could be capping pricing relative to gold. But ultimately, I'm a silver believer. I think I like gold, and I'm constructive gold. Silver plays a bigger role in the energy transition than versus gold. Plus, it's got that investment demand, safe haven characteristics. So. For the short term, you may be a little bit uneasy about silver, and I have a $24 forecast. But certainly, I think as we move past the recession, and we're looking at sort of longer term themes where the Fed is perhaps has to come in and stimulate again. I think silver has a ton of potential on the upside, and the upside risk is definitely there.
Okay, so my uncle, another
uncle.
Another uncle that I have that is very bullish on silver. He always, since I'm 10 years old, he keep giving me 1 ounce silver coins at Christmas. He said to me, 10 years ago, it will go to 100. Do you think this is possible in the next, I don't know, 5 to 10 years?
So, okay, if we, silver pretty much reached 25, just to round it up, this year, and in the past it hit 50. So it doubled. Gold doubled in the in sort of the wake of the 2008 financial crisis. It doubled from 800 to 16 in a short amount of time. So absolutely, talking about silver doubling from here is not out of the realm within the next 5 years, and that's just to achieve the recent high. $100 silver, that's quadrupling from current levels.
More ambitious.
Yeah, very ambitious, but I think you can. It wouldn't be our base case, but I think you can put together a case where if you start to see governments lose control of inflation and there's certainly a lot of fear, and supply can't respond enough. Being a byproduct can work in its favor and against it. So if we see a credible amount of demand, supply, most of silver is produced as a byproduct to gold and base metals. So you may see that kick in, and that certainly could be a big tailwind for silver.
Okay, very interesting. I ask him all my questions. No? Now I will see some audience questions just to. Okay, hi. We talk a lot about digital currency. Do you think that in the future Bitcoin, for example, will ever be able to compete with gold as a safe haven?
So I'm a gold analyst, but obviously I look at crypto and a ton of other asset classes as it competes with, or do they complement? And again, I think it's an immature market that for sure needs to work through the regulatory hurdles. I don't think a lot of confidence was perhaps broken in that industry second half of this year, and it's being questioned this year. So I think it needs to win back a ton of confidence. Will it compete as a safe haven? Probably unlikely. Will it compete as a fiat hedge? That's more likely, and that's how I'd look at the Bitcoin gold argument. Is we talk about de-dollarization, and that's the big theme now going out the next sort of decade. And if you see increasingly more central banks, retailers, institutional investors looking for alternate ways against fiat currencies, whether it's dollar or whether it's sort of G10 currencies, I think that's where crypto can play a bigger competing role with gold.
Yeah, very interesting. And Khaled asked if the prediction take into account the mining production. So we know today that every year we mine between 1% and 2%. So this is the inflation in gold. So your prediction take in account the fact that we experiment with this inflation, right?
Does my prediction take into account gold mine supply, primary?
Yeah,
mine
exactly.
Supply?
I think that Khaled is asking that if you are taking into account the fact that there are more or less 3,000 tons entering the gold market every year.
So to a degree, I look at gold as most of the gold sits already above ground, not underground, right? Yeah. So if we're going to really up underground primary production, it's going to have a minimal effect on the gold price, unlike in copper or unlike in PGMs or other metals where it does have a bigger effect. What you look at is incremental demand, whether that is retail, central bank, investors, and where does it get to the point where it's going to incentivize above ground stocks to come back. So your supply is from above ground stocks, whether that's central banks. Central banks own, when we talk about ETFs own under 100 million. Central banks own over 1 billion, 10 times as much. So, it's where does that price go, where it's going to bring above ground supply, not necessarily production, and attract that back to keep prices lower.
Interesting. There is Natalie that asks if we can resume in French. Maybe we will do an article on a blog post in our newsletter, so we can translate a little bit of the content that we were talking about that. So we already talked about Bitcoin, so we'll jump these questions. So what does the future hold for gold and silver price? We more or less answered this question. And how do you integrate the potential geopolitical troubles and their impact on gold price in your prediction? So this is...
Yeah, so it's we're over 1 year on, and there's still an ongoing war, which is terrible, and it absolutely impacted gold pricing last year. Gold is a geopolitical hedge. What gold sometimes, and most markets get a little, how do I say this? Easily bored. And so if there's not new bad news, it sort of looks, it's a little forward looking. So I do think increased geopolitical tensions, whether that's the war or whether we're talking about deglobalization as a whole, which I think is occurring, I think it's price supportive. I don't think that's going to drive the next new price wave. But if there is a new hot war, if there's a new economic war, if there's something new beyond what we're already pricing in, absolutely, that's going to be priced in, and I'll have to adjust to the upside.
And again, one tricky question from Charles. It's now a good time to buy gold, because this is the question at the end of the day all our customers ask to themselves, or even ask to us, and we cannot give them any answer because we are not expert as you are.
Yeah. So if as an investment gold demand, I think yes, if gold has already come down over $100, I think it is a good time to diversify into gold. There may be a little downside risk if the Fed does hike and they're a little hawkish, but I do think they'll be pretty short-lived. And I look at it through like a trading lens versus an investment lens. And if you're looking to risk $20 and you're going to miss the next $100 move up, then perhaps that's not a great risk reward. So I think it's where it's held, we're certainly seeing support come in here at 1950, and it was 1600, which moved up to 1800, which moved up to 1900, and we starting to see that support move up. So I do think it's good levels, and same with silver. I think especially sub 25 silver is it's certainly attractive at these levels.
And then again, I say for our customers that are more long-term investor, if you predict, if you want to diversify your portfolio and have, part of your assets in gold, it makes sense, to accumulate, to maybe sometimes to avoid checking the price every 5 minutes.
Yeah.
If it's a long-term strategy.
It's right, and it's you can piecemeal it in for sure. Over some time, but if it's in the long term. We live in a world of so much free information. You sometimes take a step back. If you're long term, I think it makes sense to diversify, especially if you've got very little, no gold exposure at the moment.
Mark, how is the price volatility of gold and silver impacted the decision-making process of investment last year? Is the war making a difference?
So yes, volatility certainly impacts investors in certain ways. The more if there's more uncertainty and there's more volatility in the price action, it could attract sort of your more fast moving investor who's going to trade it more versus invest it more. So the double-edged sword to that is volatility could scare away perhaps more safer haven type investors. So ultimately, I look at volatility as and it's in most market. If there's an increase in volatility, I think it's indicative of the broader macro backdrop, which in turn is indicative of more uncertainty, which in theory should be more bullish for sort of gold as a long-term strategy.
Okay. And speaking about volatility, I think immediately to Palladium and Platinum.
Yes.
That are more volatile and, as you said before, are more impacted by mining and production.
Yes.
What is your view on these two metals that are more, for specialists? We don't suggest to all our customers to, jump on this metal because it's not an easy play, but it's maybe interesting,
Yes, for sure. And, I think platinum is, both metals are produced by South Africa and Russia, and they've got a huge exposure to the auto industry. So I think the energy transition can impact them depending on your view of whether we're all going to be driving Teslas or not in a couple of years. But certainly platinum has a more of an industrial aspect to it in terms of demand, and a very, very strong investment demand, and jewelry, which makes it a little bit more resilient to the energy transition than palladium and rhodium. Both are relatively illiquid and pretty volatile. But platinum at $1,000 pretty much, we're talking about, and I'm from South Africa, and I was just home, over 6 months ago, and we're currently dealing with 11 hours of no power from your main producer.
Wow.
And so right now, the threat of a recession, China not opening fast enough, has dampened the price. But I think certainly from a supply side perspective, there is a lot of underpriced risk in PGMs, given what's going on with the power crisis in South Africa.
Yeah, so it's impressive. I was not aware that part of the platinum is mined in Russia. So I can imagine that even due to the actual situation, there is less supply.
Yes.
And if there is some energy tension in South Africa, it seems that there will be more and more volatility on the
supply.
Yeah.
Yes. No. There's a lot of uncertainty around supply risk from both countries that consumers are taking into account. And assessing whether there's enough above ground stocks that could fill any shortage in primary supply. But again, I think it's something that we certainly supply will model out in with our price forecasts, and we do see it being increasingly a bigger issue for both metals going forward.
Okay, very interesting. Flavio Riva, if I invest now in gold right now, how much percent winning I can get in 10 years, most likely? So maybe without answering directly to the question of Flavio, if you have to participate to LBMA 10 years
right.
forecast challenge where you have to guess the average price for the next 10 years, what can
I think, in terms of, let's break it down in 5 years and 10 years, and I said we say that because there is an expected recession. I'm going through the expectation that the Fed and policymakers will respond. And again, if you we already doubled price, which we did in 2008. So doubling prices, I think, to talk $3,000 within 5 years and perhaps 4,000 plus in 10 years is not unrealistic. And 4,000 plus is just doubling from current levels. So again, you talk about entering this higher inflation regime, and precious metals playing more of a part. So we're constructive for sure. Structurally, of the next 5 to 10 years.
Yeah, so interesting for the price of gold, but from a personal life perspective, is not really reassuring. No, if the price of gold increased so much, it means that there will be still a lot of tension, geopolitical problems all around the world for the next 5 to 10 years.
Yes, no, it's not. And again, it's not going to be a straight line, and markets aren't very linear, and it won't be a straight line. It will be, up and down. I think there'll be a lot more volatility in markets going forward. But yes, it isn't reassuring if the macro fear gauge, which is gold, is going to be higher. But I think, you take a step back and you look at some of these big structural themes that are happening. And they're happening slowly, but they're moving in gold's direction. We talk about ongoing deglobalization. We talk about ongoing de-dollarization, higher inflation. Like all of these are just structurally pretty bullish. Gold, yeah.
And probably the last question. So we will have done 30 minutes. That was what we planned at the beginning. Umar is wondering how much is needed to start investing. Investing with our company. Okay, but this is regarding our company. Anyone can invest starting 1 gram of gold up to whatever amount you want as a retail customer. So really feel free to open an account on Gold Avenue, join us. You will receive every week the comments of Nicky on our newsletter. Very valuable, very interesting. And again, I think that it's really interesting to see that you take all the insight of the industry of the MKS PAMP group, one of the leader worldwide, to then realize and do your own conclusion. So this is really interesting. And voila, I think maybe last question for the last minute. Are there any upcoming technology or innovation that could disrupt the precious metal market? So maybe just to answer to this question regarding all this new wave of EI, and I don't know if we have to use a lot of precious metal in EI technologies. There's
not much direct. How I think about the technological revolution, AI, there's not much direct input of gold into the actual processes from an industrial perspective. But I think what you should look at is gold is a hedge against the disruption that it may cause to jobs, to potentially economic growth, and looking at it through that lens. If we're trying to energy transition in a world that is very polarized, is there going to be economic war over critical materials? Gold is then a hedge that. So I think that's how I think about gold in the sort of the AI technical sort of revolution and how to interpret it.
Okay, really interesting. I'm really looking forward for the next few months to see if we are right with your prediction, with the. And obviously, on our side, we hope that the war will end, that there will be more stable economical situation. But it's always useful to have a little bit of gold to hedge yourself, to diversify your portfolio, no matter the price if it's going up or down. And again, I thank you once more to accepting the invitation to come having this small talk with me and our small community. And let's say to the next time.
Yeah, great. No, thank you for inviting me. It's been great.
Cool. Thank you, Nicky.
Thank you.